morning, traders. Welcome to the Elliott Wave Street weekly update. I'm Juan Maldonado, and it's a pleasure to share with you some of our wave counts. We are going to start today with the Euro, then we're checking the S&P. Before we start, don't forget that you can sign up for the Elliott Wave Street membership. We have the Forex, commodities and indices a package, or the stocks, or the full access. Here you can get a list of the daily instruments that we cover on Elliott Wave Street Monday through Friday, with videos, with charts and more, plus education. So sign up now, just at $19 the first month. All right, traders. So let's talk about the euro, which has been dropping strongly. We have been seeing this corrective wave. We were finding the end of this corrective wave. We have a strong sell-off here, and the price is making wave 3, here wave 4 today, wave 5, and after that I'm looking for an ABC for B, and a leg down, a strong leg down after that. Back to this previous low is the target, the 99.50. We can go to lower time frames to find out what's happening inside the wave 4. So the hourly chart is going to help us finding the wave 4. So clearly wave 4 is active. Seems that it's going to be pretty big, so that's good. Here is A in progress, B and C. So imagine having this pattern with a stop in action in the middle, where this would be wave A, this would be wave B, and of course this would be wave C, A, B, C, a zigzag. But of course we need to have a wave B happening here. Then the C and the rejection will be a trade, will be a nice day trade to target the previous low. Once we have the five wave sequence for to complete our wave A, we have to get ready for a deeper corrective, and then the next leg down. So with Elliott Wave, we can navigate the markets, understanding the past and projecting the future using the wave theory. Let's jump into the S&P. Let's do together an exercise here on the daily chart. I'm going to hide some of these waves so we can see the exercise. Look, in the past we got price crossing the previous retrace. So this is known as a change of a structure, not only on the Elliott Wave theory, but in many techniques. When the price crosses the previous retrace, is a change of a structure or change of behavior. So look what happened here. We got price crossing this area. We got a 3-wave sequence here, right? But the price, instead of building a corrective wave, it made an impulsive leg, as you can see. 5 waves down instead of 3. So that was a hint that something was not right with having this as a 1, 2, 3. And precisely there, the price rejects and moves down, giving validation that this was a corrective wave. Nowadays, we are living exactly the same pattern. Look, we have this B as this B, right? This area, the price crosses, and we have the same 3-wave sequence. I believe that wave 3 is almost complete, and I'm looking for the price to drop here for wave 4. Could go to the 200 area, maybe the 100. I think that the 100 is likely to be too much, but at least to the 200 area in a corrective shape, which is different to the impulsive leg. So corrections are different to the impulse, are completely different structures. In the impulse, you're going to have a 5-wave sequence. In the corrective, you're going to have a corrective 3-wave sequence, but is losing momentum, while the impulse is gaining momentum. So there are key differences between a corrective and an impulsive leg that we can identify during the road, and we can create a strategy around that setup. So if it's corrective, we are going to have wave 5, something that we didn't have here. As you can see, 4 fails to make a high. After that, there wasn't a 4, it builds an impulse down, so it's different. What else is different between these two setups? On the first setup, we got high inflation. Well, inflation has been high the entire year and is still high, but this month, for the first time ever, we were seeing inflation coming down. The report shows 0% of inflation this month, well, the previous month, but the report this month, and that clearly is a green light, is a green flag for the S&P. That's why we were seeing crossing the S&P this area, thanks to the inflation report, to the CPI report. So if that's true, I think we found a bottom on the market. If not, something like this setup is going to happen. We're going to have a 5-wave sequence instead, and then we should sell it after the 3-wave sequence, and we should get ready for a lower low. This leg will be the definition point of the wave count. This leg, wave 4, is the one that is going to give us the validation, is the one that is going to give us the understanding, the deep understanding of what's going on inside. So in the meantime, of course, we can day trade, we can scalp, we can do our magic as traders. Let's go to lower time frames. Let me explain what we are looking this week on the lower time frames. So first of all, I think we are going to have a higher high today on the S&P. Yesterday, we were looking for the same as after these 4. So the plan yesterday with the bias in the membership was to go long on the S&P to target at least the high. So that one worked really well. And today is the same. We're looking for price to reject here. It's rejecting now and moving back to the previous high. And there we will see if the price starts extending the wave 5, it's possible. We could have wave 3 extending further to the 340, 350, maybe to the 400 area. But if, on the other hand, the price rejects here, and I mean like a bearish engulfing candle, let's say, re-entering this area, that's where I'm going to start shorting the S&P, and we can have price moving to the 200. We will see the market structure once we get there, if it's a good idea to go long at the 200, or if it's something stronger, we could very easily reach the 100 area. Could be some sort of double zigzag or something for 4. So that's something that could happen as well. So we have to get ready for that setup in case that happens. So we will have the one or the other, we will see, but clearly this will be a short trade if we have the rejection. So you can see how Elliott wave can give us a good plan to follow depending on the wave that we are. So it's key to find which wave we are actually seeing in the chart, and then we create a plan, we create a strategy, and if we are day trading, if we're scalping, if we're swing trading, depending of what we are doing, we wait for the signal and we manage the trade, right? That's it. And in the membership, we create these trading plans every day, these detailed trading plans every day, showing exactly what we are looking, showing precisely the strategy for the session, and of course, updating the wave counts and understanding the market cycles using the Elliott wave theory. All right, traders. So that's the plan for today. Please have a fantastic trading week. Don't forget to join us in the Elliott Wave Street membership here on ElliottWaveStreet.com. Under the membership tab, you will find all the details about the membership that we offer. Please have a great rest of your day. I'll see you soon. Take care. Bye-bye.